Folks, welcome back to another update for Bitcoin and Ripple. Now, are they turning bullish finally? They were a bit of a downtrend previously, although longer term they're very much on uptrend. But on the daily at least, they're starting to turn up in terms of a trend. Before we go any further, make sure you hit that like and subscribe button to support the channel. Also, reference the +1 videos in the description below, which go in a deeper dive on some trading strategies and ideas. And this is the latest one we did just a couple of days ago. So you can reference that for those 4 strategies. In terms of the outlook, Bitcoin trading near 111,000, supported by ETF inflows and post-halving supply constraints. Bitcoin market cap leads at 2.3 trillion with hash rate at record highs, signaling strong network security, regulatory clarity strong, widely treated as a commodity. ETFs already approved in US markets. For Ripple, around 270, boosted by legal clarity after SEC case resolution. XRP fundamentals improving, adoption in cross-border payments driving liquidity growth. Risk remain, macro shifts and ETF outflows for BTC, for Bitcoin, execution and token concentration for XRP. So starting with Bitcoin, we always look at the long-term trends. On the weekly, first off, you can see there longer term it's still bullish. The price is above the moving averages. Although I do notice we've got a declining CCI. Now that's a bearish divergence in that period there between those trend lines there in corresponding price and CCI movements. Now I've drawn a target area there. That's a 23-38% retrace. It's a minimum retrace we can expect. Now you can see there it came close. It didn't quite touch it. It doesn't always hit these minimum retraces, but more than 90% of the time that they do. And in this case, it possibly may have. It's still in a bearish divergence, so I'm not ruling it out totally. We might see the price continue on the downside. The CCI is still dropping overall, so just be cautious of going too strongly bullish on this one, although you can trade on the lower time frames if that's still your preference. On the daily, you can see there as well we had a bearish momentum back here with the price and the CCI below the moving averages, and on the daily it's finally broken above those moving averages on both the price and the CCI. So taking long trades from this period now. On the hourly, what we look for is any micro moves, and micro moves I'm talking about divergence primarily. So you can see here back here we had a bullish divergence, lower lows on the price, higher lows on the CCI, and it finally bounced. And in this case you can see there it broke up to the 100% retrace level and is still rising at the moment. Now working backwards from where we are at the moment, what we look for is any divergence. So you can see here this could possibly be a bearish divergence in the coming hours. We've got lower highs on the CCI versus currently equal highs on the price, and that's already I suppose that's already considered a bearish divergence. So I'm not going to mark it as a pullback yet, but that'll become showing a Fibonacci retrace in that range there if it was to pull back. As soon as it starts pulling back towards these moving averages, that's when we look at a potential retrace to that minimum target range. Now going to the back test, again looking at the daily here, going short from that period when the price broke below the moving average, and so did the CCI. You would have taken short positions here on the hourly. And here is the CCI 14 strategy. Again, reference the videos we covered recently to understand better that strategy. And back here, let it run. You can see there while the price is declining, you would have entered a couple of trades there. The price moved up, no trades, started breaking down again, another entry, another contract entered. There, no entries, closing it out. So you can see there where it opened and closed each of those trades. Here it averaged down once, a couple of single entries there, and so on. Now you would not have entered this short position here, and why is that? Because what we look for is, again, we're looking at the daily trend. You can see there you would have let it run short during that whole period of these trades here, and you would have avoided, or you would have closed out and avoided going short at that point there when the CCI broke into the moving average range. And that corresponds with this period back here. And you can see there was no contracts open. You would have generated at that point revenue of about $4,000, and you would not have entered these trades here, which means you would have avoided that drawdown. So always trade in the direction of the daily and close out and stop trading whenever that CCI moves against you. In this case, if you're going short, close out the short positions. Now, here where we are at the moment, you would be going long, and that's right where we are at the moment here. The daily is showing long positions, long trades only. So at the moment, see the price is moving higher. the CCI is still below the moving average. So wait until we get that break on the hourly to open up your first long position on this trade potential. So wait for that to break higher, in which case we want to see the CCI 14 here also break to the upside to be, or continue in an upside trend. It's already broken to the upside to enter a long position. So we're just waiting on this CCI 150 down here to break above the moving averages. So this is XRP. So again, on the weekly, you can see that the price is well above the moving averages. On the CCI is declining, and that was a bearish divergence in that period. You can see there we drew a target area that hit it almost immediately after that high. It dropped down in the week, in that second or third week from there. And since then it's been fluctuating up across the top of that 23% Fibonacci retrace. So at the moment though, it's still somewhat neutral on the weekly, bullish on the price, but bearish on the CCI. So don't go placing any trades on the daily if you're trading on the daily. Remember, we're always trading according to the higher time frame. Just hang off until we get a decisive move on the price or the CCI moving in the right position. On the daily, it's currently bullish. So if you're trading on the hourly, you can go long. You can see the price is above the moving averages, and so is the CCI. Back here when the price broke below, and so did the CCI, you would have taken short trades, and I'll show you the back test in a moment. But at the moment, taking long positions. And what I'm also looking for is any divergence. On the hourly, again, working backwards. First of all, we look at the price movement, bullish. The CCI is still bearish or neutral. So wait for that to break higher to be more confident to go long, to start taking any long positions. Now, the other thing we look for is any divergence. You can see they're working backwards. That CCI is moving in line with the price. The highs and those lows are lower than those lows. Or those highs are lower than those highs. And going back to this period, we had a higher highs on the price versus lower highs on the CCI. That's a bearish divergence. And let's see if it hit its target. And we take it back to that significant low. You can see there quite easily it broke into that 23-38% range. That range there. So that worked quite nicely, fell in that range, and it bounced out of there. So currently it's moving pretty much neutral positioning on the hourly, so don't go placing long trades until we see the CCI break above that. Now on the back test, again looking at the daily, going short from the 14th of August back here when the price broke below, and so did the CCI. You would have taken short positions from back there. Now notice here as well on the hourly, as I mentioned, we've got bullish divergence. Back here we had it, and it bounced. Here was the target range. It hit it right through it, went about 50% of the Fibonacci range. So you would have closed out your positions somewhere in that range there as soon as you started seeing the price move higher. But notice during the daily chart, the CCI kept falling. You might have, as I said, you might have closed it out in one of those periods there, then reopened it. And more recently, you would have closed it out near this period here, which is also coincides with this bullish divergence. So going short as soon as you start seeing the price move higher, as it did in this case when the moving averages start bending up, in accordance with the CCI also making higher highs, that's where you would have closed it out. You might have had one position open there, but at that point, when it broke above the moving average of the price and the CCI was higher, you would have closed out your position somewhere in that range there, and that would have generated about $42,000 if you're trading $5,000 lots of contracts on this XRP ETF. So hit that like and subscribe button to support the channel. That'd be appreciated. If you enjoy the content, subscribe at least on the free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Thanks, and talk to you in our next video.